Hello everyone, welcome back to our insurance learning series. In our previous lecture, we learned what insurance is and why people purchase insurance. So, today we are going to learn about the most common types of insurance and how each type protects us from different kinds of financial risks. Before we begin, I want you to think about your own life. Most people own valuable things. Maybe it's a house, or it's a car, it's a business. Maybe it's simply the income they earn every month. Now imagine something unexpected happens. A fire damages your home, a car accident occurs, someone gets injured and sues you, or you become seriously ill and need expensive medical treatment. Could you easily pay all those expenses from your savings? For most of the people, the answer is no. That's why insurance came into picture. To make this easier to understand, we'll follow the story of San and Tarak. They own a home, 2 cars, and a sandwich shop. Throughout this lecture, we'll see how different insurance policies protect different parts of their lives. So, by the end of this session, you will understand which insurance protects homes, which protects cars, which protects families, and which protects businesses. Before we talk about insurance policies, we need to understand a very important insurance term. The term is called loss exposure. So basically, a loss exposure simply means anything that could cause a financial loss. So don't worry about the fancy wording here, we'll make it simple. So if your phone falls into the water and stops working, that's a loss exposure. If your car is damaged in an accident, that's a loss exposure. Also, if a storm damages your roof, that is also a loss exposure. If you suddenly need surgery and receive a large hospital bill, that's also a loss exposure. So now let's look at San and Tarak. Their home could be damaged by fire, theft, or severe weather. Their cars could be involved in accidents. Someone in the family could become sick and require medical treatment. So at their sandwich shop, an employee could get injured. A customer could slip and fall, or someone could file a lawsuit against the business. Every one of these situations would cost money, and that's exactly what insurance is designed to address. Insurance helps transfer the financial risk from the person or business to the insurance company. So, this process basically we call it as a risk transfer. Instead of paying the entire loss themselves, they pay a smaller amount called premium, and the insurance company helps cover large covered losses. Now that we understand the risks, let's talk about personal insurance. This topic is quite interesting. Yeah, let's get into it. Personal insurance protects individuals and families. Think about the things that are most important in your personal life: your home, your vehicle, your health, your income, your family's future. So, personal insurance helps protect all of these. There are basically 4 major categories. There are property insurance, liability insurance, life insurance, health insurance. So, each one protects against a different type of risk. Here, the property insurance protects things you own, like your home or belongings, from damage or loss. Liability insurance protects you when you accidentally cause harm to others, that you are responsible for injuries or damages to others. Life insurance protects your family's financial future. And health insurance protects you from large medical expenses. So, together, these policies create a financial safety net. They help families recover from unexpected events without facing major financial hardship. Now, this is about property insurance. So, property insurance protects things that you own. Many people think property insurance only covers the house itself. No, that's not true. But it also protects many belongings inside the house. Think about everything in your home: furniture, television, laptop, appliances, clothing. So, all of these items have value. Now, imagine if fire starts in your kitchen. The fire damages several rooms and destroy many belongings. Repairing the home could cost thousands of dollars. So, replacing these damaged items could cost thousands more, obviously, right? And most families would struggle to pay those costs immediately. And their property insurance came into picture and helps by paying covered repair and replacement costs. Now let's look at the example of San and Tarak. A fire damages their home. The house needs repairs and cannot be lived in for 2 months. The family now faces another problem. Where will they stay? The house got burned. They may need a hotel, right? They may need to eat at restaurants because they can't cook at home. They may need temporary housing. These costs are covered under additional living expenses or ALE. So, the property insurance protects not only the house itself but also the family's temporary living expenses. Let's discuss about liability insurance. Yeah, this is one of the most important types of insurance because it protects you when someone else gets hurt because of something you are responsible for. Yeah, let's make it clear with a simple example. Suppose a guest visits your home. While walking down the stairs, they fall and break their arm, or maybe your dog bites a visitor, or your child accidentally damages a neighbor's expensive property. In these situations, you may be legally responsible. That means you may have to pay medical bills, repair costs, legal fees, or settlements. These expenses can become very large. That's where liability insurance helps. Let's look at Tarak's example. His dog bites a guest during a gathering. The guest requires treatment and the medical bill reaches $20,000. So, which is very high amount to pay from a pocket of that person. The liability insurance pays the covered expenses. If the guest files a lawsuit, liability insurance may also help pay legal defense cost. This protection prevents one accident from creating a major financial burden. Amazing, right? Here we'll talk about two very important protection. One is life insurance and the other is health insurance. So let's start with life insurance, which is designed to protect the people who depend on you financially. Think about a family where one person earns most of the income. The income pays for housing, food, transportation, education, and daily living expenses. Now imagine that person unexpectedly passes away. The income stops, but the bills continue. Life insurance helps provide money so the family can continue paying those expenses. In our example, suppose San is the primary income earner. If San passes away unexpectedly, life insurance helps Tarak continue paying the mortgage and supporting the family. Now let's look at the health insurance. Healthcare can be very expensive. Even a short hospital stay can cost thousands of dollars, in the USA especially. Yeah, major surgeries can cost tens of thousands. Suppose a sudden illness leads to a $40,000 surgery. Yeah, no surprise. Without health insurance, that bill could create serious financial stress. Health insurance pays most covered medical expenses and reduces what the family pays themselves. Life insurance protects your family's future. Health insurance protects your family from large medical costs. Now let's move from the basic types of insurance and look at an actual insurance policy that many people purchase. That policy is homeowners insurance. Homeowners insurance is one of the most common insurance policies because it protects one of the biggest investments most people will ever make, their home. Think about everything that a home contains: the house itself, furniture, televisions, computers, kitchen appliances, clothing, personal belongings, antique pieces. Suppose if a major event damages these items, replacing everything can be very expensive. Homeowners insurance combines several protections into one policy. First, it protects the structure of the house. Second, it protects personal belongings inside the house. Third, it provides liability protection if someone gets injured on your property. And fourth, it can help pay temporary living expenses if you cannot stay in your home. Let's look at the example shown. Suppose a kitchen fire starts in San and Tarak's home. The fire spreads and causes $60,000 in damage. Without insurance, they would need to pay for all repairs themselves. But homeowners insurance helps cover those repair costs. Now imagine someone breaks into the house and steals a television, laptop, and jewelry. Replacing those items could cost thousands of dollars. Homeowners insurance helps cover those losses as well. And also, if a guest is injured while visiting their property, the liability portion of homeowners insurance may help pay the medical expenses. So here the takeaway is the homeowners insurance protects your house, your belongings, and your liability risk all in one policy. And here liability and ALE. ALE means additional living expenses, which means extra money for temporary living when you can't stay in your home because of a covered loss. Let's talk about personal auto insurance. So for many families, a vehicle is one of their most valuable assets. Most people drive every day to work, school, shopping centers, and other places. Unfortunately, accidents can happen even when we are careful drivers. A single accident can result in vehicle damage, medical bills, and legal expenses. This is why auto insurance is so important. There are three major coverages shown on the slide. The first is bodily injury liability, second, property damage liability, third, collision coverage. So, let's get in order. A bodily injury liability. This pays for injuries you cause to another person. The property damage liability. This pays for damage you cause to someone else's vehicle or property. And the collision coverage talks about it helps pay for damage to your own vehicle after an accident. Let's look at the example so that it would be clear for your understanding. Suppose San rear-ends another vehicle while driving. The other driver suffers injuries that cost $10,000 to treat. Their vehicle has $7,000 in damage. So without this insurance, San would have to pay all those expenses. Auto insurance helps cover those costs. However, it is important to understand that auto insurance does not pay for routine maintenance like oil changes, it does not pay for replacing worn out tires, and it does not pay for mechanical problems caused by age. So basically, this insurance is designed to cover sudden accidental losses, not regular maintenance. And therefore, the auto insurance protects drivers from the financial consequences of vehicle accidents. The personal umbrella insurance. Many people already have homeowners insurance and auto insurance. So you may wonder, why would someone need another insurance policy? Yeah, the answer is simple. Sometimes accidents are much larger than expected. Think about a serious car accident involving multiple people. Medical bills can be very high, lawsuits can reach hundreds of thousands or even millions of dollars. Your regular insurance policy has limits. Once those limits are reached, you may become personally responsible for the remaining amount. This is where insurance becomes valuable. Think of umbrella insurance as an extra layer of protection. So let's dive into the example. Suppose San causes a serious accident, the lawsuit reaches $2 million. So auto policy can only pay up to $500,000. That leaves $1.5 million still unpaid. Without this umbrella insurance, San may have to use his savings, investments, or other personal assets to pay that amount. With umbrella insurance, the additional coverage helps pay the remaining eligible amount. So, umbrella insurance provides extra protection when a lawsuit is larger than your regular insurance limits. So far, we have discussed insurance policies that protect individuals and families. Now, let's switch our focus to businesses. Here, businesses face many risks every day. Just like a family can experience a financial loss, a business can also experience financial losses. Let's think about San and Tarak's sandwich shop. So, here, what could go wrong? There may be a fire could damage the building, equipment could be stolen, an employee could get injured while working, a customer could slip and fall, a delivery vehicle could be involved in an accident, a number of situations. So, any of these situations could cost thousands of dollars. And the commercial insurance helps businesses manage all these risks. There are four major areas shown on this slide are property, liability, vehicle and employees. So the property coverage protects buildings, equipment, inventory and business property. The liability coverage protects against customer injuries and lawsuits. Vehicle coverage protects vehicles used for business purposes. And the employee related coverage helps protect workers and the business itself. So the business often purchase either a BOP, which stands for Businessowners Policy, or a CPP, which stands for Commercial Package Policy. A BOP combines common coverages into one package and is often used by smaller businesses. And CPP provides more flexibility and allows businesses to customize their coverage. And here, the commercial insurance helps businesses survive unexpected losses and continue operating successfully. Let's look at some real world examples of how commercial insurance protects a business. So, first, let's talk about property coverage. Imagine a fire starts in the sandwich shop kitchen. The fire damages cooking equipment, furniture, and inventory. The repairing or replacing those items can be very expensive. The commercial property insurance helps pay those costs. Next is workers' compensation. Suppose an employee slips on a wet floor in the kitchen and injures their back. They need medical treatment and cannot work for several weeks. Workers' compensation helps pay medical bills and may also provide wage benefits while the employee recovers. Now let's talk about commercial auto insurance. Suppose a delivery driver causes an accident while delivering food. The accident damages another vehicle and injures another driver. Commercial auto insurance helps cover those expenses. And then it's the liability coverage. Imagine a customer slips on a wet floor and gets injured, or suppose a customer claims they became sick after eating food from the shop. The business may face a lawsuit. Then general liability insurance helps cover legal expenses, settlements and medical costs. All these coverages work together to protect the business. So without them, a single incident could create serious financial problems. The commercial insurance uses multiple coverages working together to protect a business from different kinds of risks. Let's take a moment to review everything we learned today. We started by discussing loss exposures, which are situations that can cause financial loss. We learned that insurance helps transfer financial risk from individuals and businesses to insurance companies. For personal protection, San and Tarak use several types of insurance. Property insurance protects their belongings. Liability insurance protects them if they accidentally injure someone or damage property. Life insurance protects their family's financial future. Health insurance protects them from large medical expenses. Homeowners insurance protects their home and belongings. And auto insurance protects them while driving. Umbrella insurance provides additional liability protection. For their sandwich shop, they rely on commercial insurance. This includes property coverage, liability coverage, workers' compensation, commercial auto coverage, and other protections. Together, these policies create a complete protection plan for both their family and their businesses. Different insurance policies protect different risks, but together they provide financial security and peace of mind. We have now reached the end of this lecture. Today we learn about the most common types of personal and commercial insurance. We saw how different policies protect homes, vehicles, health, income, businesses, employees, and personal assets. The most important lesson to remember is this: insurance is not about expecting bad things to happen. It is about being financially prepared if something unexpected does happen. Just as San and Tarak use different insurance policies to protect their family and businesses. Insurance help millions of people manage risks every day. Yeah, thank you for joining me in this lecture. I hope you found this session helpful and easy to understand. See you.